A lot of times when you get these factors that are short term, spooking the markets a little bit, and inflation is a real concern to the markets as a whole. But in this particular case, we just saw that long yield going up quite a bit in a short period of time. Yeah, then you start talking and using the inflation word and the like. But one thing I alluded to last week was that this was really more a short-term thing, and that the markets still had plenty of room to grow. We're seeing just the beginnings of an expansion, a continued expansion in the markets, and that technology has recovered somewhat from the malaise that we saw last week, and a little bit of sector rotation going on as well, which we should keep a watch on, because that, I believe, is going to continue. I've made a career out of having both growth and value stocks work for me at the same time. So it is not unusual for them to, at times, grow together. And let's just break it back to its most basic components. Growth stocks are like Coca-Cola, because you recognize the name, and value stocks are like a Home Depot that lost 10 points because they came in with bad earnings. They're both big capitalization stocks, and they're both high quality, and in most cases they pay dividends. So investors look to holding these type of companies overall to make a part of a complete portfolio, and any good portfolio manager, institutional or otherwise, is holding both types at any given one point, unless they're strict growth or strict value, and it will combine for a much better total return on their portfolio, along with fixed income and other instruments. Investors will always pay attention to inflation and what the Fed does to how it's going to respond to inflation. The Fed has outlined that they want to control inflation at 2%. All right. I remember the days when inflation was over 6% and heading on 8%. So the fact that, the Fed also indicated that we are not at 2% just yet. If it starts creeping up, which is not unusual, when interest rates start to climb, if inflation starts creeping up, the Fed will use all its powers to start, controlling that growth, and to also make sure that they're ahead of it. I firmly believe that the Fed is on top of this at this time. Have they been caught unaware? Sure. But at the same time, they've been more right than wrong in these scenarios. So I do trust that Jerome Powell and the Fed are going to do exactly the job that they were hired to do. And I'm confident that inflation, for the time being, is going to remain controlled, and that investors should really focus more on their portfolios and the growth potential in their portfolios, and taking the risk and going forward versus the inflation fears. Yes, be aware of it, know that it's out there, but at the same time, focus on the things that made you money this past year. We are at a point where there's going to be another growth spurt, because more people are going back to work. You saw the unemployment numbers last week, and it was a big difference in those numbers. We see that as the beginning of a continuing trend. As states are opening up again, we're seeing 3 or 4 states removing the mask mandate. People are going back to work. This is not necessarily ideal, according to the CDC, but at the same time, it will affect payroll and employment as people start getting back to work and the economy starts moving along.